You've been analyzing structure wrong, and it's not your fault. For a while now, we've been deep in the trenches, testing every structure theory we could find, and what we discovered turned everything upside down. We've built something different, and today we're revealing a new indicator with a new approach, one that doesn't require a length input from the user, and it maps not one, not two, but 3 layers of structure, significantly minimizing lag and making it ideal for capturing the most subtle shifts between bull and bear markets before anyone sees it coming. If you've ever felt like you were always one step behind when analyzing market structure, strap in as we demo this new indicator. Most market structure tools force traders to decide upfront how deep or shallow their pivot detection should be. Too shallow, and the chart explodes into noise. Every minor jiggle crowns itself a swing. Too deep, and the important shifts vanish until they are ancient history. This indicator sidesteps that dilemma by adopting an alternative method of detecting structure, where market structure is shaped by 3 distinct levels of swing points: short-term, intermediate, and long-term. This cascading logic means the indicator is constantly self-tuning, without ever requiring a pivot length input or any form of guidance from the user. And since this indicator relies solely on closed bars, yesterday's candle can never be revoked. What you see in the moment is what remains on the chart forever. Nothing repaints. Once added to your chart, you'll immediately see 3 distinct types of lines, each representing a different layer of market structure. The dotted line captures short-term structure. It's your earliest signal, ideal for spotting a trend continuation or potential reversal, before most indicators even flinch. Then comes the dashed line, marking an intermediate level shift. This serves as a more reliable confirmation, useful when you want to filter out noise and catch cleaner setups. Finally, the solid line represents long-term structure changes. It's the most significant signal, and by default, it's the only one labeled LTMSS, long-term market structure shift. At the swing points that define this structural change, you'll also notice subtle dot markers. These visually confirm the precise pivots behind each long-term shift. But here's where it gets powerful. Every layer is customizable. Jump into the settings and you'll find dedicated sections for short, intermediate, and long-term structures. Want labels for the other levels? You can turn them on. Prefer a different line style or color scheme? It's all adjustable. You can even choose to display a floating label for structure type, instead of just decoding by line style alone. In short, you're not just seeing structure, you're tailoring how it's shown, so it aligns perfectly with how you trade. And unlike most structure indicators that rely on static pivot counts, each layer of structure in this indicator adapts dynamically, making it uniquely effective in chaotic or fast-moving markets. It doesn't wait for a fixed number of bars to confirm a swing. Instead, it reads the intent of price itself, allowing you to detect structure where other tools may get lost. In this example, we're using the Signals and Overlays toolkit to algorithmically determine directional bias, with the ML classifier enabled to rate each signal from 1 to 4, where 1s and 2s indicate a retracement, and 3s and 4s confirm trend continuation. In this case, a level 2 confirmation tells us the market is pulling back within an uptrend. As the candle colors shift from purple to red, we see momentum building, marking the transition from a weak trend to a strong one. But the real insight comes when we enable the pure price action structure overlay. All 3 layers of structure appear during the retracement, even before the candles transition to red for strong bearish confirmation. This gives us a roadmap. A short-term confirmation during the red candles could serve as the initial entry and our smallest position. Then, as the trend strengthens and structure shifts align with the directional bias, intermediate confirmation follows, offering a more solid entry. And finally, when the long-term structure breaks, it provides the strongest confirmation for scaling in further. And there, you have 3 positions entered all at different levels of confirmation. It's important to note that entries at the long-term level can sometimes face short retracements before continuation, which makes this layered, confirmation-based approach especially effective for managing risk while positioning with the broader trend. In this next example, we're focused on confirming a strong long-term trend. However, as mentioned earlier, significant long-term confirmations are often followed by deep retracements before the broader move resumes. So how do we handle entries following those market structure changes? Here, we've identified a long-term break of structure confirming bullish intent, and after some upside movement, we start to get a pullback. Instead of guessing where to enter, we can improve timing by identifying oversold conditions within the retracement using a tool like the RSI. Once price enters an oversold region while long-term structure remains intact, we begin looking for short-term structure confirmations. In this case, as price exits the oversold zone, we receive that short-term signal, prompting a small, early position. Because it's a lower-tier confirmation, we size conservatively and aim for nearby highs. What's crucial here is how that short-term confirmation offered an early opportunity to enter, rather than waiting for the intermediate confirmation which, in this instance, arrived too late. It's a clear demonstration of why short-term signals shouldn't be overlooked. They can provide precision entries and improve risk-reward when used within the broader structural context. And that's just a glimpse of how this multi-layered structure tool can transform the way you read price action by giving you real-time clarity across short, intermediate, and long-term trends. We hope this walkthrough helped you understand how to use it effectively and how to adapt it to your own trading strategy. You can start using this tool completely free at luxalgo.com/library. And if you're looking to enhance your edge even further, the Signals and Overlays toolkit we featured in this video is also available to try, risk-free for 30 days at luxalgo.com. Thanks for watching, trade smart, and we'll see you in the next one.